Hello, welcome to the podcast by Kilde. I'm Nate, marketing manager at Kilde. We are an investment platform for accredited investors, and we are based out of Singapore, and we are licensed in Singapore. Today we have here with us Radek, who is our CEO and co-founder of Kilde, and we are going to be talking about private credit investing. Radek, do you want to start a little bit with your background and how you came to co-found Kilde?
Sure, thanks for having me, Nay. So what to say about my background? So I am an ex-consultant in a big four companies. I was working in several markets, Eastern Europe, Asia, London. I am based in Singapore since 2017, and my passion always was to achieve really excellence by using mathematics, statistics, system thinking about the my customers' problems, and that brought me usually to the companies which have a very large operations, which were banks, non-bank financial companies, card management companies, telcos, and so on, where you can have a lot of impact by making perhaps like a small changes in the way how these companies approach the problems. Yeah, so that's my background, and I run successful consulting business in the credit risk and operations out of Singapore. And after a while, we think, okay, let's why not to start a product business, which is a bit more interesting because you build something which gonna last, which more people can use, and that's how I started Kilde.
Thanks for sharing that, Radek. So, just out of interest, what inspired you to venture into the private credit investment space? Since for us, for all of it, it's quite new, right? So, we're just kind of interested to find more about how you got into that space.
Yeah, so I got into the space not knowing this is a private credit. I did learn it later. Uh, Practically, the story is that I know my co-founder since about 15 years ago, and back then he invested in a digital lending company when the digital lending was on the onset, and he offered me to co-invest with him, and I was not in the right mindset to accept that proposal at the time, but later on the company did very well, and lately it was sold to the international bank with a big exit for whoever invested or whoever helped this company. When Oleg came to me about 4 years back, okay, let's do an investment company together in a similar space. I did not dare to second guess Oleg again and say, okay, sure, let's do it. Let's start working together, and that's how we started.
That's amazing. So, I think for uh, obviously I work at the company, but for those unfamiliar with Kilde, can you explain what your platform offers and how it differs from other traditional investment options?
It differs a lot. Basically, the first like difference, we do almost everything digitally, and we almost do everything in-house, and that allows us to give investors an undiluted access to the so-called private credit investments. Private credit is anything else when you buy on the public markets. You like buy your bonds, you like treasuries, corporate bonds, whichever bond, which is listed on the public markets, and the price goes up and down. So when you do
Hmm.
anything else and it's a credit, then it falls into the large umbrella of the private credit investments. The thing how we do it different because the access to the private credit investments a few years back for the individual investors was practically impossible. It's a area for big investment funds, banks as well, by the way, and large investors. Some of the deals are size of the $1 billion, for instance. So it's no way how the individual investor will even get a glimpse of that. But what we did and what is the trend right now is a so-called democratization of the access to these uh, previously inaccessible asset classes. Private credit is one of them, and we do that by eliminating the minimum investments, eliminating all the intermediaries which will be between you and actually your target company which you are investing into. And that way we solve the problem. We gave access to people to um, private credit,
Hmm.
to relatively high return they can get from it, and the relative stability of that investment, which is highly valued by the institutional investors. And now the individuals can can enjoy it as well through us or through other platforms like ours.
It's interesting you're touching upon the individual investors. So my follow-up question would be, what type of investors typically benefit the most from your platform?
So I would say anyone can benefit. So anybody who wants to get a regular income from their investment will benefit from a platform like ours, and anybody will benefit from the fixed income investing. Also, somebody who wants to get a private credit allocation, which is generally recommended to be about maybe 10-15% of your portfolio. Unless you have a few $1,000,000, you can actually invest into and get access to the fund. Then you will benefit from a platform like ours, where you can invest with a ticket as little as $100. But jokes aside, we need to protect our investment from inflation. Inflation is eating up a lot of income investments. The issue when you invest through a traditional investments instruments is that there's so many intermediaries between you and the investments you are making that private credit, which would typically like generate gross returns maybe 15-13%, then suddenly it becomes 8% for you. And then depending where you live and how much is the inflation, you can do the math. Okay, does this really work, right? And does really traditional investment work? Does it protect your money against the inflation? So that's one aspect to it. The second aspect, usually people invest through ETFs. Maybe they're gonna be buying into some mutual fund, which is great. You should do it, definitely. But the downside is that typically the profits you are making are kind of on the paper. So you can watch it somewhere on your dashboard in the best case, and in the worst case you could get paper statements once a quarter, or your wealth advisor will tell you some number, or your wealth has dropped or your wealth has gone up if you are lucky. But it's on the paper, right? So not so many investments which should give you a real income. So we call it in investment space, they are giving you a distribution. So let's say every quarter, every month, you actually get cash out of your investment. Your returns are actually cash out and you get it. You can reinvest it, of course, or but you can use it for something else. Not so many investments are doing that for the reason it's too expensive. Also, the underlying investment actually generating cash, this cash gets reinvested, reused, right, by the fund manager. It's rarely distributed back to the investor because it's so expensive to do the payments in and out, right? That's not very viable and takes a long time as well, and a lot of administration. I mean, we know the investment industry relies on spreadsheets, right, on Excel, so it's quite hard, and that's why a fully digitized platform like ours, for us it's easy to make the distribution, because we are directly in connection with the borrower. We are directly in connection with the investors, and we can intermediate this and facilitate those payments. So with us, you can get a real cash, and that's something which I haven't seen in many places.
It's quite interesting. I'm also seeing that Kilde continues to deliver consistent returns. Just this year itself, we've had a net return of 12.2%. I think maybe it would be a little bit worthwhile for us to talk a little bit about Kilde's investment strategy, particularly on the delivering consistent double-digit returns.
So I'm basically asking, okay, where the magic is created, why it is like so high.
What's the secret sauce?
The secret. I would say,
Yes.
ask the question differently, like why it's so low everywhere else, right? That I would be asking. It's there are very interesting like researches on the investment industry, on the private investments specifically, and the papers are saying that the amount of fees which are charged can be up to 40% actually of the total returns can be actually eaten up by the fees. And this is statistics of the investment. It was a 20 years time series research which has been done recently by the independent researchers. So that's the answer. Okay, when we are giving 12% and when somebody is giving 6, 7, 8%, right? Taking the caveat that might be a investment strategy in something like a treasury bond, something very liquid but very low yielding, yes, and then genuinely you will get those lower returns, but at the same time, you get liquidity, you get more perks with. So what we are doing at Kilde is something called asset-backed lending strategy. So for the beginners, it is we are lending against something which generates cash. So asset is anything productive, right? Anything. Asset can be a consumer loans portfolio. Asset can be some machine which is doing something. Assets can be you can imagine ice cream machine, right? Where it's creating ice creams. People are buying ice cream. This is an asset. So we are lending against an asset versus when you are doing unsecured lending or other types of lending. So for us, it's as important when we consider investment is the reliability of the borrower and the stability of the cash generating by that asset against which we are lending. And the assets against which we are lending tend to be very highly distributed and very highly diversified. So there are tens of thousands of the small consumer loans, micro, small and medium enterprises loans, invoices. So hence, when you put together a lot of these small loans, the general cash flow which is coming becomes very predictable. So each individual small loan is very unpredictable in terms of, okay, it could be 0-1 effect. Like 0 doesn't pay, 1 it does pay. But if you have thousands of them, suddenly it becomes a very stable business. And banks know this very well, right? That's what they have been lending for hundreds of years. That's why you need to portfolio diversification to do this. Yeah, so we've been doing this. How maybe your next question, could be like why this opportunity hasn't been taken up, like why it is available now, like for us. So first of all, globally, what is happening that due to the regulation, the banks are stepping out from a number of investments which they've been traditionally doing. So traditionally, banks were supporting small and medium businesses, not doing that much anymore. Not entirely their fault. It's there are a number of factors why they are like retrenching from those, and it creates an opportunity for the investment companies like ours to step in actually and take those otherwise traditionally banking investments with a different structures, right? Where we raise funds from the investors in the form of the debt notes or debentures, how we call it, and then we deploy on their behalf, collect the coupons, collect the principal, manage the whole investments, and distribute back to investors.
I see.